Okay, let's get in Ankur Shah as well, who now joins in. And Ankur, what's the sense that you're getting on the street, given the fact that in the past month, we did see relentless selling pressure, particularly from the FIIs who were continuously selling in the markets? How are you looking at the Indian markets from the liquidity standpoint? What is the story ahead?
Yeah, I think the concern from an FII perspective is that you've had GDP growth slowing for the past 5 quarters. And if you're a FII, basically you don't have a dedicated allocation to India. You might be looking at other emerging markets. And I think, India trading at roughly 20 times a forward multiple versus something like 13 times for the MSCI emerging markets. There's other much cheaper markets out there. And it's kind of like a rotation out of India into some other cheaper emerging markets, basically, is what's occurring now.
Right. Ankur, I was just looking at your idea that you shared with us earlier. One of the big themes which you are following here is the financialization of our savings here in India. You are expecting a lot of saving move away from traditional gold and real estate and expected to go into financial assets. Talk to us a little more about this theme and what are the stocks which should be on radar which are likely to benefit because of this theme.
Yeah, so as you mentioned, typically for the Indian saver, the holy trinity was cash, real estate, and gold. And as you have increasing digitization, increasing amount of bank accounts being opened up, and I think over time what you're going to have is more people flow into financial assets. And so as you see with basically domestic fund flows, increasing month over month, I think you're going to see a continuation of that going forward. And I think the main beneficiaries will obviously be the brokerage houses, asset managers, and the insurers, both life insurance and general insurers.
Mm-hmm.
Okay, Ankur, I wanted to come in here on what your outlook is on some of the recent listings as well that we've seen. The primary markets have been so abuzz this year, particularly over the past few months. Is there anything that you would be looking at? How are you, viewing some of these news stories? And do you think that there are certain pockets which look fundamentally attractive as well, based on some of the companies that have recently hit the markets?
In general, as a value investor, I tend to avoid IPOs just because they typically tend to be overpriced. I think I would take a wait and see approach to see if valuations come down somewhat, and then maybe take a little more, a more detailed look at some of the newer companies that are being listed. But I think some of the insurance listings are kind of interesting at this point.
Right. Let's talk about the housing finance companies then. That is one area of the entire financial sector which you look at closely as a beneficiary of a lot of triggers. What are these triggers, and what are the housing finance stocks that you have on your radar?
Sure. So I think the key here is just if you look at mortgage debt to GDP outstanding, India has about a 10% penetration rate, which is dramatically low compared to any other, compared to any other emerging markets. And if you look at some of the European and more developed countries, you have something closer to a 90% penetration ratio. So I think this is like a multi-decade story where over time, mortgage debt will increase as a percentage of GDP. And I think because some of the reforms put in by the government, the lower income segment is where you want to be targeting. And so I think the HFCs that are focusing on the lower income segment is where you want to be looking to put some investment to work.
And why do you believe that the overall NBFC theme is a compelling area for investors to look at? What's the rationale here, Ankur?
So, as you have more people moving into financial assets, of course, personal lending and consumer lending is going to increase, as you've seen with some of the NBFCs that have just performed really well, like with Bajaj Finance, for example. So I think right now valuations are a little high, but I think over time you're going to definitely see continuation of personal lending growth. And I think the main beneficiaries that are the private sector banks and the NBFCs that focus on the retail segment. And so I think that's just a longer-term story. And I think right now it's a little expensive, but I think if you have a longer-term time frame, maybe a 3 to 5 year time frame, it's not a bad place to start looking for investments.
Right. Ankur, one last call. If one were to compare the kind of stocks we have in housing finance, PNB Housing, Repco Home Finance, LIC Housing, Diwan Housing, or the other ones, the bigger one, Indiabull Housing and HDFC Limited. If one were to take a bet on this pocket versus NBFCs, the consumer lenders which you spoke about, and one had to drill down to one pocket, how do you compare, and which is your relatively more preferred pocket?
I would still focus on the lower income segment in the housing finance space, and I would look at the guys that are focusing on the tier 2 and tier 3 cities. And I think, because in the tier 1 cities you have the banks and the HFCs competing, quite dramatically for new mortgage lending, whereas I think some of the tier 2 and tier 3 players are where people are focusing on tier 2 and tier 3 cities have a better advantage, and you can pick up some more additional lending growth from those areas.
All right, Ankur, great chatting with you. Thanks for joining in and giving us your overall view on the Indian market, some of the themes as well that you're upbeat on. HFCs as well as the NBFCs look attractive. Tell you what, we'll slip into a quick break. We're connecting with the management of HOEC when we return.